Get to know your finances on the Money Wake Up Call. Now here's your host, Dwayne Ellis.
Good day, everyone. My name is Dwayne Ellis, and I'm the host of the Money Wake Up Call. Thank you all for clicking your button and joining. We are now about to enter into part 2 of our conversation involving the Black wealth gap. And really what I want to do and what I'm going to do with this particular series is I'm not going to rush it. So I'm going to put it in parts. So this part, and everybody who's listened to any video that I've done, I'm solution based. So I'm going to say certain things and show certain stats and things of that sort, but it's all about getting solutions to closing the gap, because I think we all can see that it's important for us in the African American community, the Black community, to be better with our money and increase our wealth overall as a community. That's really a non-negotiable. So we know we need to do it. So the question is, what are the ways that we can do it? What are the actions that we need to take? What are some of the things we need to add to the toolbox to get it done? So with that as a backdrop, I'll lay some data out here, but we're not going to lay on the data all day. Now, this is data from FINRA, which is the Financial Industry Regulatory Authority. Shows that 22% of African Americans, 25% of Hispanics, 36% of whites, and 47% of Asians have held taxable investment accounts. Now, what's a taxable investment account? So that is what you would call a brokerage account. So inside of a brokerage account, you would have mutual funds, ETFs, stocks, bonds, those kind of things. And other communities outside of the Hispanic community have 10, 15, sometimes double the percent of participation in that particular area. And what we're going to be talking about today really involves investments in the Black wealth gap. Why is this important? Because the money that's in these particular brokerage accounts, has an opportunity to grow. Really, if you don't get anything else from this particular session, you've got to understand, and I have to understand, that your money must grow to keep up with inflation, to keep up and to really decrease the gap of wealth. We've got to put some of our money in a situation where it has an opportunity to grow. So this particular sentence here talks about even investors who just kept pace with the S&P 500. That's Standard & Poor's 500. That's the 500 largest companies in the United States. Increased their capital by an average of 166% over every 10-year period since 1979. So what does that mean? From 1979 to 1989 to 1999 to 2009 to 2019. If you had just did the S&P, meaning if you got an index that tracked the S&P, you would get significant growth in your wealth and in your assets, by just being really simple. And there's simple ways to do it. And I think I've said it in other videos. You have different ways in which you can invest and use the markets. There's a fast lane, there's a middle lane, and then there's a slow lane. That particular strategy right there really would be more of the middle lane, just keeping up with the S&P 500. And I'm going to do, certain workshops, which is going to really break down what that is. But this is a real 20,000 foot talk about how do we close the gap, the wealth gap. The data shows that white middle income households earning between $37,000 and $61,000 have an average of about $86,000 in assets. Assets average $11,000 for families and $86,000 for Latino families in that same income range. What does that mean? That means that folks earning the same type of money between 37,000 and 61,000, white middle income households have more assets saved up. Now, that's a function of budgeting, which I think we're going to have a talk about that maybe in part 3 or part 4 of this talk. That's a function of a couple things. But one of the major functions is when other communities are putting money away, they're putting it away in assets that have an opportunity to grow over time. And that's really what we're talking about here. A portion of your assets has to be put in a situation where it has an opportunity to grow. And, there's a lot of fear that's involved with that. But we have to really, at the end of the day, get education to kind of eliminate that particular fear. So I want to go into a particular article, and there's so many articles on what we're talking about. But I just want to go into one that really talks about, that fear factor. So fear and trust, and let's give these guys their credit in terms of articles. So longstanding disparity between Black and white investors narrows, but new risk emerge. So we're doing better, but again, the gap could be closed more, really, if we knew if it was a gap. And I think we know that. But then also, eliminating the fear and mistrust in the markets. And this particular line that I'm highlighting here talks about us being less trustful in the stock market, financial institutions as compared to other communities. And really, that is a lack of education at the end of the day. And there's a myriad of things out here, social media, which again is good and bad when you're talking about education, but we have to kind of lose that fear. Black investors are more fearful of losing money than white investors. Why? Because they have more money saved up. They can absorb a loss a little better than we can. And, since 2020, Black Americans have either stopped investing or not investing as much in the stock market and in financial institutions. And I mean, if you're talking about 2020, then you're talking about the pandemic. So, you can add that to the mix to why we stopped investing during that time, but we have to pick it back up if we're going to actually close that gap. Now, as you go further into this article, it talks about 401k participation, which we do have a strong level. That's really the gateway to most of us into investing and into the stock markets, participating in 401ks. It's where those individual accounts come up. So you've got the 401k at the job, and it's the other monies that you have where you could create an investing portfolio, a brokerage account, an IRA, a Roth IRA, other vehicles. That's the one we have to pick up on. Oddly enough, with all of the fear in the stock market, here's something I thought was interesting. Cryptocurrency. We're outpacing. This is one of the things that we're outpacing our counterparts in terms of participation. Cryptocurrency, which at the end of the day is a very risky proposition. So not quite sure why that's the case. I have my thoughts about that, but maybe that'll be for another video. So the moral of this particular story and the moral of this video is for us to understand that we need to use investing either in the fast lane, the middle lane, or even the slow lane to decrease that gap, that wealth gap between our community and other communities. That's just one facet of closing the gap, the wealth gap in our community. So I think I'll stop right there. Subsequent videos are going to talk about the other ways in which we can help to decrease the Black wealth gap and really leave generational wealth for our family, friends, and loved ones. So thank you very much for your time and attention, and I look forward to seeing you all soon.